A stick figure sits in front of a computer while friends excitedly yell, "This stock is going to the moon!" and "Buy now before it's too late." Some investors spend every day chasing the next big winner, checking stock prices every 5 minutes, reading breaking news, watching charts. But then, there's this guy, calmly watering a plant while sipping coffee. He checks his portfolio once a month. His phone is suspiciously quiet, and somehow, he sleeps just fine. Meet LeBron, the dividend investor. LeBron gets his first job. Like everyone else, he could spend every extra dollar. New gadgets, expensive clothes, weekend shopping sprees. Instead, LeBron buys shares of companies that pay dividends. His first payment arrives. It's tiny, just a few cents. His friends laugh. "You waited 3 months for that?" LeBron smiles. Because he isn't investing for today. He's investing for years from now. Imagine owning a pizza shop. Every month, the business makes money. Instead of keeping every dollar, the owner shares part of the profits with everyone who owns a piece of the business. That's essentially what many dividend-paying companies do. When you own shares, you may receive a portion of the company's profits. No extra work required. Coins gently fall into LeBron's account. It's not free money. It's your share of a successful business. LeBron receives another dividend. Instead of spending it, he buys more shares. Those new shares pay dividends too. Then those dividends buy even more shares. Soon, his money begins building itself. It's like planting one apple tree. That tree grows apples. The apples grow more trees. Those trees grow even more apples. Eventually, you have an orchard. The stock market crashes. News channels flash giant red arrows. Friends call LeBron. "Aren't you selling?" LeBron checks his portfolio. Everything is down. He shrugs. His favorite companies are now cheaper. Better yet, many continue paying dividends. So LeBron keeps buying. Because every dollar now purchases more shares than before. 5 years pass. LeBron isn't rich. 10 years pass. Still not rich. Some friends make quick profits trading. Others lose everything. LeBron just keeps investing. Month after month. Year after year. Nothing flashy. Nothing viral. Just consistency. 20 years later, the dividends become noticeable. Instead of buying lunch, they could pay for groceries. A few years later, utilities, insurance, vacations. Eventually, the dividend income covers a significant portion of LeBron's living expenses. Not because LeBron found a secret stock, but because time kept working in the background. Many people think dividend investors are trying to get rich overnight. They're not. They're trying to build income. Income that doesn't require clocking in. Income that can continue whether they're working, traveling, or relaxing at home. The portfolio becomes less like a collection of stocks and more like a group of tiny businesses sending cash every few months. Some people think dividends are free money. They're not. When a company pays a dividend, the stock price often adjusts by roughly the same amount. The real advantage isn't the payment itself. It's owning strong businesses that consistently generate profits and return value to shareholders over many years. The dividend is simply one way successful companies reward their owners. LeBron never became famous. He never doubled his money overnight. He never had screenshots of million-dollar trades. But decades later, he built something many investors never do: reliable income, peace of mind, and the freedom to let time do most of the work. Streams of coins flow in from several tiny businesses in the background. Wealth isn't always built with excitement. Sometimes it's built with patience. If you enjoyed this animated story, subscribe for more stick-figure videos about investing, personal finance, and the psychology behind building long-term wealth. Because sometimes, the quietest investors end up making the most noise.